Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for January 22nd, 2023. I hope you guys are having a great January. It has been chock full of volatility. And next week, a lot of you might be thinking, well, it's the week before the Fed, so it's going to be kind of slow. I don't think so. I think there's some really big developments that are taking place in the market right now that you need to be very keenly aware of. But before we get into that, let me just say that if you haven't taken advantage of the pricing discount that we do only a couple of times a year for Forex Analytics, make sure you do so. We do this annually. Sometimes 2 times a year we'll give a discount. So, and if you've been watching these videos for a long time, you know they only come around every once in a while. So take advantage of it. Buy 1 month, get 1 month free. Then we have a 30% discount for the semi-annual, and then a 40% discount for the annual subscription. And also make sure that you're downloading the mobile app and you're jumping in our Forex Analytics community. It comes with, private Forex Analytics community shows that we do. You get all of these tools like the data flash, you got, live squawk stream, you've got a news flow stream directly from our team. But also the most important thing is, and the heartbeat of Forex Analytics is our chat rooms. And you can see inside of our chat rooms, it is extremely busy and active. And, there's people posting, and then we have our trades where people are talking about what they're buying and selling and getting in and out of. And it's not just me, it's the rest of the community as well. So make sure you guys and gals take advantage of the pricing discount while you got it. And then, I didn't even mention all the analysis here. So make sure you guys check that out. All right, now let's talk about what's going on this next week, because this next week, I still think it's going to be a very busy week. And by the way, I am going from, the analysis that we have here on Forex Analytics. I'm actually just going to go into live charts. For most of you know that I do that just so I can draw on the charts right here. And go through everything. You notice the Aussie is the first thing that I pulled up. And these are, all of our updates from last week, the last time you and I sat here on the week ahead video. But next week's going to be kind of a big week for the Aussie dollar. First of all, they have CPI. So CPI data is going to be rocking the Aussie dollar this next week. So what I think we should be doing right now is taking a really good, solid look at what the Aussie is doing as a whole. So I'm going to actually delete one thing. And I think at this point in time, we can delete the inverted head and shoulder pattern because we knew it did it. It completed it. Whoops, I don't know what I just deleted. Hold on, let me figure that out. Oh, I want to keep that. So that's already, been there, done that. And now you can really take a look at the Aussie kind of from a longer term perspective and say, okay, well, how much upside do we have here? So I'm going to actually delete this fib. And we're going to go from the last known major high, okay, to the low. And I'm going to put in my, my settings. And you can see we came within just a hair of the 618 retracement. Now, if you listen to our daily F.A.C.E, Morning Edge, daily roundup, all the private shows that we do for the Forex Analytics community that are right here, if you guys don't know where to find them. And by the way, this is where our 2 free shows are at too. So if you want to register for those, make sure you're registering to them, because you're not listening to just me, you're listening to the rest of the team. Anyway, you already knew that we were coming really close to 618. You knew that we had that channel resistance. You also probably knew, and I'm just going to point out here, is we had a false breakout this week. So Dale, our host for the F.A.C.E show, he always calls us a throwover. You have a channel that you try to break out of, and then it doesn't, and it fails. It's called a rollover, or a throwover, excuse me. That's something that we have to be aware of, I believe, because we are at, a big resistance level right here. Okay, it's a big 618. Now you can see how we recovered at the end of the week. That's really it. It's Friday. It was Friday. Stocks were recovering on Friday. We were trying to get back towards 4,000 in the S&P, and when the market's quiet, it just kind of lifts higher. There's no real rhyme or reason. You always hear the saying, "Don't short a dull market." Well, on Friday afternoons, it's usually pretty dull. So unless there's something stopping it, the market just tends to grind higher. that grind higher happening at risk. We'll look at the S&P in just in a second, but I think you want to look at this opportunity as an opportunity to sell into strength. Now, remember, the CPI data comes out on Wednesday morning in Australia. And that is Tuesday night if you live in the U.S. or in North America. One of the things that I do need to express is this last week, if you guys didn't see it, UK announced their CPI, and it was really sticky. Now, I think if you live in the UK, you're watching from somewhere in Europe, you're probably like, well, that makes sense to me. I don't know if that's going to be the same situation for the Aussie, but what I will tell you is, if for some reason the Australian CPI comes in hotter than expected or even in line, make sure you respect that, because that would suggest that the Aussie is probably going to bounce back into this channel resistance. Just like the cable, we had this CPI data that came out this week, and it pushed us right up into resistance, because most traders, analysts, economists believe that inflation has peaked globally. But if we start getting indications that it hasn't, you're going to start seeing it percolate in currencies like the cable. You're also going to see it in the Aussie. So just keep in mind that the Aussie CPI, and it's all not just the Australian CPI, by the way, it is also the New Zealand CPI data is also coming out that same day, just a couple hours before. Let me stop and talk about the Kiwi. Let's go back to the Aussie. Let me finish my thoughts here. So my opinion is that we have obviously big resistance up here at the 618. You guys can see that. Also big support down here at the 200-day moving average, and also this channel, right, that you can see right there. So we happen to be kind of in the middle of the range, but that's okay. When you have a week ahead of the FOMC, which is going to be the following week, next week, or not next week, but in a week and a half from when you're watching this, that's okay. You know your ranges, you know your playground, your little sandbox. Stay in it. It's right here. You see the sandbox? It is literally right here. Well, actually, I can even delete that, and I can say that your sandbox is right here, so you know where to play in. Right? So, as a trader, the best thing that we can do, and the only thing that we can really do, is control our risk. But we can also, take a look at our technicals and say, okay, that is the range that we're dealing with, and if I want to sell Aussie dollars, I want to sell it up towards the upper end of my sandbox. And if I want to buy Aussie dollars, I want to buy it at the lower end of my sandbox, right? Best place for risk reward in these types of trades. All right. Anyway, I'm going off on a tangent. Let's go ahead and take a look at the Kiwi. So if you look, and you try to just think about the Kiwi, same issue with the Aussie. It is going to rally substantially if New Zealand CPI data comes in hotter than expected. That's, that is going to be for everything that we're looking at, right? But let's do this really quick. I'm going to do something for you. First of all, I want to delete everything, but I'm just not going to do that. I'm going to delete this. I'm going to delete this. I'm going to delete this fib, because you can see this is a very, very shallow retracement. So I'm going to delete these lines right here, and I'm going to leave us a little barren, because what you're going to notice here is that we have, for all intents and purposes, an inverted head and shoulder pattern developing. Now, one of the problems that I believe with this inverted head and shoulder pattern is there's not enough time to make it symmetrical on the left or on the right shoulder than there is in the left shoulder. So I believe there should be a little bit more downside before we should break out. That doesn't matter. It doesn't matter what I think, though. It doesn't matter what the textbook says. The market can still break out, right? It can. So I'm not going to sit there and say, well, it has to happen, and I'm just not getting long if it doesn't happen. That would be silly. All right. The fact of the matter is, if you look at like a 4-hour chart, and let's develop this a little bit. Whoops, I didn't want to do that. So let me get rid of that line, and let's get rid of this. And I'm going to do something a little bit different for you. Okay. What this looks like, if you ask me, is this is a cup and handle pattern that is also developing. So in the event, and now I'm going to take you out to Tuesday. in the event that on Tuesday you see New Zealand have stronger inflation than expected, I think the setup is that we get a breakout, a cup and handle breakout. All right. Now, ultimately, what I'd love to see is the right shoulder of this long-term, what I hope to be an inverted head and shoulder pattern play out a little bit. There's a couple reasons. It develops some symmetry, right? More symmetry, the better when you're talking technicals, because it really is like reinforces the idea. But also, if it does dip again, it's going to give you and I an opportunity to buy Kiwis at a better price, because right now I don't own New Zealand dollars, right? I mean, New Zealand US dollar, I don't own it. So I'm not long. So what I'd rather do is I'd rather be long somewhere down here, over the course of the next week or two. I'd love to see it a drop, like this, and then be long down here. That's ultimately what I'd like to see. But that doesn't mean the market's going to tell or give me exactly what I want. The market very rarely does. So you got the Aussie, the Kiwi, the Antipodean currencies we just talked about a little bit. So let's now take it over to I want to take it over to the euro, because I do need to point out that the euro is, annoyingly, if you remember last week, we were talking about how stubbornly strong it is. It's still strong. It is still very strong, and it is it's stubbornly strong. So I think we got to respect that. That means the dollar is going to remain under pressure while the euro is above 107.70. And if we finally can break below 107.70, that would probably suggest that the euro is carving in a major top, or a near-term top, intermediate top, let's just say over the next couple of months. What is some important data that's coming out next week in Europe? Well, you have all the PMIs that come out Tuesday morning, right? And you also have German IFO business climate on Wednesday. And I believe that's going to be it for the Eurozone. But also keep in mind that we have the ECB and the Bank of England coming up as well. So, a lot of central banks are coming up, but doesn't mean that things aren't going to get spicy between now and then. Now, I am going to talk about gold. I am going to talk about the S&P, and I'm going to talk about the most important chart to all of this at the very end, in my opinion. So make sure you guys and gals don't go anywhere. I do want to cover a couple of last things regarding currencies. So a lot of people have been looking at this dollar Canadian, and we just got past the Bank of Canada, right, this week. Now, the one thing about the dollar Canadian we had been talking about is this underside of this broken trend line. And I think it's been frustrating a lot of traders. I'm going to tell you from my perspective, I've not been trading the loonie or the dollar Canadian much at all. I tried to trade some New Zealand Canadian last week. I took a loss, and I'm like, I don't have a good grip of what's happening with Canada right now. I'm sorry, I just said the BOC is last week. BOC is this week. That's the reason why we do need to pay attention to what's happening this next week, is because we will have the Bank of Canada coming up on the 25th. So with that being said, notice how the dollar Canadian is challenging the underside of the broken trend line. It's close. I mean, you say, well, Blake, we didn't quite get there, but I'm going to just say that I think that hand grenades and horseshoes and technical analysis all go hand in hand. Approximations work, right? So I would say that underside of that trend line is the deciding factor whether or not the dollar Canadian is going to go higher or not. If we get above 135. Or we can just round it up and say 136. You get above 136, it becomes bullish at that point. But notice, and I'm going to just let me remove these blue rectangles for a second. I want you to notice that this big drop, 618 retracement. Now, notice that this drop is you'll delete it right here and you'll see this is a 50% retracement. What that means is the bounces are becoming more shallow which is not bullish. It would be actually the opposite. So what you also note here is we are, and especially if this holds, we're making lower highs. Now you can also argue we're making higher lows, but I think being below this broken trend line actually still puts the risk that we actually break lower first. Now, I'm currently not a dollar bear. I'm actually a dollar bull. For those of you that know, already know, I'm short the euro. I've been holding a short euro most of this week. I'd sold some. Let me just show you guys. Here's our chat room. Here's our trades room. Most of you know this. You can see some of my positions here. Closed the euro dollar, still short, still selling rallies. I was short at 108.63, closed it at 108.89, 107.89. Took that position off the table, right? So and then I resold the euro. I'm maintaining euro shorts. I'm just selling rallies. That means I'm buying dollar dips. The problem that I have right now is the dollar's really not getting its head up. It's not maintaining gains against anything really. Dollar yen is a prime example, which we're going to go into next. So the reason why I say that is because we really need to see the dollar, the euro dollar break 107.70. We need to see the dollar index break back above 103 before I can be convinced that it's time to really be bullish the dollar for a counter trend rally. Now, one of the issues that we have is, as you all know, we had the Bank of Japan last week. So the BOJ did not adjust yield curve control, and a lot of people saw that as, oh, that's bearish yen initially. But then the market reversed again. The dollar yen came under pressure. Why? Well, it's simple, because most people believe that it's an eventuality that the BOJ is going to have to adjust yield curve control. It's gone out the door. We're done with that. And Japan's going to be dealing with an inflation problem, so they're going to have to actually start raising rates too. So then the dollar yen came back down. The yen strengthened. Okay, I get it. Now the dollar yen is going to have to see a serious recovery to regain its bearings, in my opinion. But there's a lot of work that has to be done in order for that to happen. That means at this point in time, you have to see this dollar yen break back above 130, 150, 132, really to suggest that a bottom is in. But if you just think about what I just said about what the BOJ is going to do, what's the likelihood of that happening? The better trade probably is going to be waiting for a move back up towards this resistance and playing the yen on the long side, meaning playing dollar yen short or other yen pairs short at that point, like the euro yen, sterling yen, Aussie yen, whatever you want to play. But I think that's a setup going into this next week. Now, we are going to get to gold, we're going to get to the stock market, and then we're going to go get to the most important chart, in my opinion, this week. But before I do so, I need to mention, if you haven't tried out or haven't checked out, the trader funding program, make sure you do so. I have just filmed a video this week, and it's in editing right now, that shows how, or it's where I talk about how I passed the assessment. Doesn't mean it's the right way, it's just the way that I did it. So I'm going to give you some tips and tricks, in my view, that'll help you pass an assessment so you can trade our money, right? So I'm going to try to help you out with that. Also, Nick of Jupiter, who just moved to Spain, he also filmed a video of how, some tips and tricks on how he passed the trader funding program multiple times in multiple assessments, and he's actually gotten payouts, big payouts, from our company, because he trades in the trader funding program. So that video is also in editing, because we need to put together some images and stuff to make it look pretty. One of the other things in those videos, the one that I did, you're going to be able to download the Word document from Google Docs, all of my trades. You can download them all at the end of the year, so you can kind of go through them and say, oh, why'd you get in here? Why'd you get out there? It's fine. All that transparency is going to be there. So check out the Trader Funding Program. There's no better time than right now to jump in the Forex analytics community, because you get it included with the Trader Funding Program for a period of time based on what assessment you take. You can take a $25,000 assessment. You can take a $1 million assessment. So if you want to trade up to $1 million of ours, you can, but you do have to pass an assessment first. But then you don't take any of the risk. You're not risking any of your money. You're risking our money, but you keep 75% of the returns. And remember, when you do this, the Trader Funding Program, there is no time restraints, because that is an added pressure that you don't need as a trader. You don't need a pressure of there being some sort of timetable for you to pass this. Do it at your own pace, because we just want to see you succeed. Anyway, we're going to go ahead and move along back into our analysis, and I'm going to talk a little bit more about what's happening let's go to the stock market, and then we're going to talk about gold. Well, actually, you know what? Let's talk about gold first. So, when I was looking at gold last week, I really didn't think we were going to hit new highs. I really thought that was it. But what you'll see is this channel resistance continued to cap the market, right? Here's channel support. You guys remember our analysis the last 2 weeks. Thought it was a wedge. There was a smaller chance of it breaking out. It broke out. We're like, well, that's going to be capped at channel resistance. It's capped at channel resistance. Notice the resistance it hit. The 161% extension, it hit and stalled. So, should gold go down from here? I would think so. I wouldn't feel very comfortable about being short on the gold unless it breaks below 18 or this 1900 level right here. Okay, if it breaks back below 1900, then maybe that would be a near-term indication that is peak. But I think if you're long, you definitely should be careful here. Now, if gold's rejecting, that is a feather in the cap of the dollar for a recovery. So just keep that in mind. Let's talk about the S&P. So the S&P, big rejection this week at the 4,000 level. These are our drawings from last week. You guys remember them. We're back at the 200-day moving average. So on Friday, we grinded higher with very, very, here, let's pull up the spiders really quick. So let me do that so you can look at the S&P spiders. And let's go over to the daily chart. You can see volume. Let me go ahead and move this down. There we go. Okay. You can see volume was good, probably squeezing out some shorts at the end of the week, but it's not by any stretch of the means, some fantastic volume that we've seen as of late. So what am I saying? It was a Friday. We were grinding higher. A little bit of buying activity there, because I think that a lot of people shorted the market midweek, and they were just getting squeezed out at the end of the week. So more of positioning than anything. But what I do think we need to pay attention to is going into next week. Remember, it is a week ahead of the Fed, right? It is a week ahead of the Fed, and we know that heading into the Fed, we are facing the 200-day moving average, channel resistance, 4,000, and we are also in earnings season. So keeping all of that in mind, we're gonna have to see some freaking blowout earnings next week, in order for the S&P to really, really charge higher. But if you look at like the Dow is really underperforming, and it has been like kind of the underperformer all week. So on the bearish side, as far as the Dow goes, you can see it, just selling off and kind of leading the rest of the stock market down throughout the course of the week. And obviously it recovered at the end of the week because the S&P did. But overall, I think we have to be very careful with longs while we're below 4,000, and especially like 4,100. You start getting above 4,100 in the S&P, that becomes more of a bullish, in my opinion, a bullish sign that we have to really get above this. Oops, here, let me grab it right here. We need to get above this 4,100 up in this level. We got to get above there, clear some of that horizontal resistance. We get outside of the channel, then it becomes bullish. But until then, be really, really careful. Now, this is probably the most important chart that I think everybody needs to be paying attention to is the 10-year. So the problem that I have with the 10-year is twofold. Earlier this week, when you were in the Forex Analytics chat room, Nick, he's one of our younger portfolio managers in our chat room. Not our portfolio manager; he manages funds. But he was he brought to my attention at the end of the day. He's like, "Hey Blake, you see this 200 days coming into view in the 10-year." And I'm like, "Yeah, I was watching the breakout earlier the day, on like more of an intraday basis." But he's like, "Hey, yeah, you see we're almost at that 200 day." And I'm like, "Yeah, good observation. Almost at the 200 day." So the next day, on Thursday, we saw this like pin bar rejection. And then by the end of the week, we did a false breakout. So the reason why I bring all this up is because, the bond market has actually told us that it is struggling at resistance, did a false breakout, and also struggling at the 200-day moving average. Now, if bonds are falling, that means yields are rallying. If yields are rallying, the thing that you need to pay attention to is the dollar, because the dollar could indeed start to strengthen here, if yields continue to rally. And I think that is something that we should be paying attention to as a whole, because the dollar is kind of in the driver's seat right now as far as risk goes. So if you start to see the dollar get a little perky, that probably, perky meaning, starts to go higher, that means that stocks are probably going to come under pressure. So just keep that in mind. Also, one last thing I should mention is that next week we do have advanced GDP numbers on Thursday, and then we have P.C.E., the Fed's favorite inflation gauge, is coming out at the very end of the week this next week. A lot of things could really move the market. And remember, the Fed is in the quiet period, the blackout period, as they call it. So we're not going to hear from any Fed governors next week ahead of the FOMC. So that means they're going to all be scrutinizing this data, as we should be as well. And I want to say, hey, guys and gals, thanks for sticking with me. I know this is a very long video, much longer than I normally go into, but I think a lot of people probably believe that next week's not going to be a big week, but I believe otherwise. And you know what? It's going to be a big week if you're with us on all of our live, free training and analysis events throughout the week for the Flow Show and also the F.A.C.E show. So guys and gals, I hope you have a great remainder of your weekend. I'll see you on Monday.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.